Okay, that's good. Okay, that's good. All right, we'll do that. We'll do that about right. Yeah. All right, do that. Morning, good morning, good morning.
The new Black Wall Street. Right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
Oh my goodness, beautiful people, man. We got a wonderful show lined up for you today. Thanks so much for joining. This is ERGJ, your host. Good morning to you. Donto's in the house, man. Thanks so much for joining ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, also international best-selling author of the book, The Black Billionaires Club. That's right, The Black Billionaires Club. It's a study of Black wealth. It's a study of the 12 richest Black people in the world today and how they built their wealth. And I just believe that if you would want to be wealthy, that's a big if, because everybody don't want to be wealthy. But if you want to be wealthy, then you should study wealthy people. Everybody put in comments below, study. You should study wealthy people. Don't listen to poor dad, listen to rich dad. We got a wonderful show lined up for you today. We're going to be doing a stock market recap. We'll be digging into the Dow, looking at Chevron. We're going to do a billionaire breakdown of 2 billionaires. One, the next one in our line, but then I found we got another one. We got a Black billionaire that wasn't included in our book. So maybe it's time for us to look at a version 2 or episode 2 of volume 2. Yeah, volume 2 of that book. While you guys are connecting, go ahead and let us know where you're connecting from, what city, what state. Rep your city. Also, go ahead and hit that like button, that share button, but most importantly, if you can, hit the watch party button if you got it. I'd like to see what that does, man. You're going to get the opportunity to invite other people that you know to your watch party. And this is going to be a party. This is going to be a money party today. Now we're going to be talking about how to earn money, and then make our money work harder for us than we work for it. And so I'm asking you guys to hit that like button, that share button. I'm going to do the same. And then the last thing I'm going to ask you to do is go ahead and let us know what it is that you do. If you have a business or a service or something that you represent, why don't you put that in the comments below? Why? Because as you're liking or as you're sharing this out, you're also sharing what you do. It's not a me party, people. It's a we party. And that's right. I want to make sure that you get some exposure across those people that's going to be reading the comments. Y'all know we're going to have some comment watchers. We're going to read the comments. Then we want to make sure that you get some exposure as well. So again, thanks so much for joining us here this morning on the New Black Wall Street. That's right, the Money and Power Show. Give me 1 second, guys. I got to hit this share button as well. I got to go ahead and send this out to a few places. I want to make sure that they don't miss this opportunity here on this beautiful, this terrific Tuesday. It's a terrific Tuesday. It's a great day to be alive. I'm still here. Thank God. I'm still here. Still got another opportunity to make a difference, another opportunity to make a difference, to make an impact. And I'm so happy I get that opportunity, guys. All right. So we got a lot to cover. We got a lot to cover here today on the Money and Power Show. Of course, the Black Billionaires Club, it is an actual club, so you can choose to join that club if you like. Brooklyn is representing this morning. Memphis is representing this morning at the Black Billionaires Club. It's only $10 a month, guys. You can just simply go and register. You're going to get the mastermind classes, financial literacy class, learn about money, investment education, learn about investing. We're going to cover a lot of investing, from stock investing to crypto investing to real estate investing. You can learn all that stuff for $10 a month, or you can keep doing what you've been doing. Hopefully what you've been doing has been working. New Black Wall Street Book Club. It's going to be where we focus on personal development and business development. So from that club, we have mastermind groups for that. How many guys are part of a mastermind that's helping you get to where you like to go? And then also we're going to give you some opportunities to make some money through our distribution network. You have an opportunity to do that all for $10 a month before the price goes up. And then you say, oh man, I should have got in. And you know what happens? We procrastinate, and we procrastinate even more. You know, so anyway, you gotta fix that, right? What do poor people do? Poor people procrastinate. All right, here's the deal, guys. Let's get right into this thing, man. We got so much to cover this morning. I mean, my goodness, so much to cover in so little time. We're gonna have a good time talking about money. Black folk talking about money in the morning. So here is, I like to go to CNN, try to see what's going on in the news, anything particular. I did find something that I wanted to kind of cover. Obviously, or what they're saying today, Apple, the good place where you get your stuff, your iPhone, your iTunes, and all that stuff. They're going to be releasing some earnings today, I believe. And they're not expecting those earnings to be very well with as far as the sales of the iPhone or the last iPhone that came out. But what I found was interesting was here. Apple two things. Yesterday, our episode yesterday, we covered Caterpillar, and I didn't finish covering Caterpillar, by the way. So I might try to pick up the rest of Caterpillar today. I'll just go to their website. We'll look. We didn't look at we didn't go to their sites. We got to do that. But yesterday they had the biggest earnings miss in a decade. Now, if you were here, if you watched yesterday's episode, we talked about Caterpillar, and I said, well, there's some things that don't seem to be very good about Caterpillar. We also talked about how, if you're a believer in this wall being built, well, Caterpillar might be something that you want to keep an eye on, right? So we talked about that yesterday in our episode yesterday. Now, here's the beautiful thing. Because of this earnings miss, Caterpillar is probably going to drop today. And guess what happens when it drops? That means that you and I have an opportunity to buy Caterpillar, if we like Caterpillar, when it goes on sale, right? So we say, hey, I'm anticipating it to drop, and so I can catch it when it goes on sale versus paying a premium for it. How many guys like to buy stuff on sale? You like to buy stuff on sale. You like to buy value on sale. Go and put a console on sale. So that's what the opportunity is there if that's what you believe. So Caterpillar is probably going to be dropping today, because of their huge earnings miss, the biggest earnings miss in a decade. That's pretty big, right? That's like historic, by the way. All right, Apple sponsors its first ever camp for women's entrepreneurs. So we're going to look at that article today. I thought that was interesting. So a camp going on for women entrepreneurs. It just says women. All right, Black women, white women, Chinese women, in period. So if you are, this might be something of interest. You got some women that are entrepreneurs, go ahead and tag them right now. Go ahead and let them know that we're doing this show, and they can learn. They have an opportunity to be involved in something that might be beneficial for them, right? For a women's entrepreneur by Apple, they're sponsoring it, a camp for them. Okay, now don't play around. Don't miss out on opportunity, and don't allow other people that you're connected to miss this opportunity. Maybe they're not up. Maybe they're not up. I don't know. Anyway, so let's take a look at the market, man. Still quick stock market recap. Yesterday, the Dow was down 208 points. The Dow is an index that houses the 30 most significant stocks in America. That's going to be companies like Apple, Nike, Home Depot, Disney. So the Dow houses the 30 most significant stocks in America. The NASDAQ was down 79 points. NASDAQ is the index that houses all your technology stocks. Okay, that's where NASDAQ is. You're going to find a lot of microchip companies and tech companies and the Googles and the Microsofts and things like that. The S&P 500, which is the broader market, it houses 500 stocks. Now, I want you to understand there's more than 10,000 stocks in the public market. So you're only getting a piece of it in order for us to have some benchmark. Everybody put a console benchmark for you and I to see how the market is doing, but then also to see how our personal portfolios are doing compared to the market. This is how you should be evaluating your retirement accounts. How are they performing compared to the market? This is how you can tell whether your fund manager is good or not. Okay, if the market is up for the year and you're close to that or above that or somewhere in the vicinity, well, your market manager doing average for you, or you're doing average for your own money. If if the market is kind of up, but you're way down, your personal portfolio is down, that means your market manager is underperforming, or you are underperforming as it relates to your money. This is your retirement account. This is what you're building for you to live off of when you can no longer work. I hope you understand it. Now, 33% of Americans don't have any money saved for retirement. We're asking for trouble in the next 40 years for people that's going to try to retire but can't because they're going to be depending on the other Americans who are working to pay for them to live until they die. This is a problem, right? We can fix it. We can fix it. We can fix the problem. As a matter of fact, you can fix your problem if that's your problem. I don't worry about everybody else fixing something. We just worry about the personal responsibility of me fixing my own problem. And then if everybody works on fixing their own money problem, then we'll all have our money problems resolved. That'll be a we. If everybody does the I, then the we will take care of itself. I hope you understand that. All right. So I don't take a look at all this stuff. I'll be moving around. As I said, Caterpillar had biggest earnings miss. That's pretty bad. We'll look at that in a second. Gainers for yesterday, American Airlines was up 5%. Estee Lauder, that's a cosmetic company, was up 3%. Altria Group, Semantic, and Martin Marietta Materials was up. Down yesterday, NVIDIA, oh Lord, down 13%. Like I said, Caterpillar was down 9% yesterday, right? 9%. Freeport was down 8%. These two companies here, Freeport and Advanced AMD, those look like great companies if you're into options. Advanced AMD is up and down all the time. That's what we consider volatility. Everybody putting on volatility. That means that there's movement. There's significant movement with these stocks often, right? They're moving up, moving down. So you can do a call and bet that it's going to move up. You can do a put and bet that it's going to go down. You can make money either way once you begin to learn about options. So these two companies seem to be very good companies to watch for their movement, price action, and make money off of that. So if you're in options, I think those are two great companies for you to be watching, and eventually once you begin to learn how they flow and operate, everything has a pattern. Everybody putting on some pattern. Everything has a pattern. Arista Networks is down 5% for the day. Over the sector performance, here's what's hot, what's not hot in the market. Really, nothing's really hot, by the way. A lot of stuff is not hot, but it's very interesting that we've been moving forward with the market, regardless of the whole performance of individual sectors. Some companies are stronger than others. The commodities, oil, up 52.39. That's $52.39 a barrel. Gasoline moved up just a little bit, $2.88 of regular unleaded gasoline across the country. Gold has been moving up. So all you gold holders, you guys are feeling good. Remember we talked about it the other day, said, man, it just looks like it's just about to finally break through 1,300. That's $1,300 per ounce, or $1,306 per ounce of gold. Silver is up $15.88. So notice how the market was, listen to this, notice how the market was down, but the commodities are up. What does that tell you? That tells you that people were moving money out of the market and moving money into commodities. What are commodities? Commodities are really what we consider to be investments that give you a store of value. Everybody putting out some store of value. Now, store of value, what that is just really just saying, hey, I want to protect my money. I'm not really looking for it to accelerate or to appreciate, but at least I want to keep what I got. So these are what I consider to be the savings options when it comes to investing, to not lose your money, not really for it to go up, but commodities are great places that you have store of value. Okay. And so if you're in the market, I also want you to understand that when people invest in the market, they don't take their money out of the market. Okay, they just move the money. This is what fund managers do. They move it from one place to the other. Either they're looking to appreciate it, they're looking for it to grow, or they're looking to save. They're looking they're trying not to lose that money. All right. Now, if you take that same approach to your own money, you might start winning, right? Say, hey, man, I'm gonna put my money in places where it can grow, and I'm gonna put my money in places that I can save. I'm gonna stop putting my money in places that I lose. Here's how stocks have been performing in 2019. Dow was up, been up 5.15%. Nasdaq's basically 7%. S&P 5.5. So since the beginning of the year, January 1st, here's how stocks have performed. So if you and I had decided we're going to become investors this year, if that was our New Year's resolution, we said, man, I'm just going to put my money into the market, our money would be no less than 5% greater than it was when we started on January 1st. Okay, no less. If we just said we're going to put our money in the market, and we didn't select any individual stocks, our money would now be no less than 5% greater than it was when we started. Now over here we got emotion in the market. It's going to be what I consider to be sentiment. This lets me know, this kind of gives me an indication of when to actually look to buy or sell. Right now, the market's telling me to really just hold what I got. It's moving into green, but it's really in a neutral. It tells me hold from a sentiment standpoint. Of course, I could be a trader. I could be in options. I can do a lot of things with stocks. I'm a value investor. That's just what I do. So the market's telling me just hold what you got. You know, maybe add some things to your watch list and watch them for a little while. But I'm looking to see if this. When I look to buy, I look to buy when it gets over into fear. I look to buy when everybody else is selling. And then what do I do when it gets over into greed or extreme greed? That's when I look to sell. I look to sell when everybody else is buying. Why? Because people are buying my what I own at a premium. And then when they are selling, I'm buying at a discount. This is called trade. Everybody put in console trade. This is called trade. I'm looking to sell what I own at a premium, and I'm looking to buy what other people own at a discount. Doesn't that just make financial sense? I mean, this is something I could teach to a 5th grader. Sell when it's high, buy when it's low. Sell when other people are buying high or buying at a premium or buying, at prices that are way over inflated, and sell when everything's on a discount. Or buy when everything's on a discount. Buy when everybody else is selling. Buy when it's on sale. That making any kind of sense to anybody? See, I think we understand it when we start looking at stuff that we can hold, when we go to the marketplace, when we actually go to the grocery store, when we go to the retail store. All these stores that we shop at are markets. Matter of fact, when you go online, you go to Amazon, that is a market. When you go on eBay, that's a market. All these are just either physical markets, virtual markets, and the stock market. Everybody putting guys on marketplace. So this is really beginning to learn what they call about the economy. It's a marketplace. So I mentioned Apple, guys. Hopefully you tagged that woman entrepreneur. Apple is sponsoring this first ever camp for women entrepreneurs. The makers of LACTAC app are getting at the Apple Park, the iPhone maker's massive California headquarters. 4 of the team members behind a mobile app, which provides bilingual guidance to breastfeeding mothers, have made a pilgrimage to Cupertino from their Barcelona headquarters. They made the trip for the kickoff of Apple's first ever entrepreneur camp, a 2-week event aimed at helping female-led businesses that have an iOS app. So if you know some females that run a business and they got apps, man, this might have been something that they would have been, I guess it's over, maybe. It already happened. But you can follow Apple for something in the future, I guess. The blind excitement is indicative of how many companies could benefit from a relationship with Apple. App developers have made more than $120 billion from Apple's App Store since launch in 2008. Can you imagine you as just say a female entrepreneur, black woman tech company, you make an app and then Apple actually buys your app? Can you imagine? Oh my goodness. You talking about real quick turnaround in your financial life real quick. Okay, so that's what Apple did. I'm not gonna read the rest of the story. It seems like it already happened. I thought it was something that was coming up. Y'all kind of fooled me. That's clickbait. That's clickbait, by the way. All right, it's time for our billionaire breakdown. All right, everybody put in console billionaire. Right, see, we study billionaires at Black Billionaires Club. We study billionaires here as well. I know you can study millionaires. We just decided to study billionaires. So our billionaire today is not somebody I like, but I'm going to read and we're going to learn about this man anyway, even though I despise him. But interestingly enough, he still owns he still has the ownership in this particular team that even though he's been removed himself from the limelight, he still owns the team. Okay, Steve Ballmer, owner of the Los Angeles Clippers, a $41.3 billion man. All right, that means he owns $41.3 billion more dollars than he owes. Okay, his net worth. Steve Ballmer is a high-wire former CEO of Microsoft. So he was hired as the CEO of Microsoft. He led the company from 2000 to 2014. He joined Microsoft in 1980 as an employee. So he started as an employee. He was the 30th employee they hired, and he worked his way up the ladder, the corporate ladder, and he became CEO, and then he got rich. Okay, so he joined Microsoft in 1980 after dropping out of the Stanford MBA program. Isn't that interesting? Now this is some good old boy stuff, right? Because if it was you and I, as a black person, we drop out of this MBA program. We probably ain't gonna make it up to CEO. They're gonna be looking at, oh, did you graduate? How many certificates do you have? This is some good old boy stuff. But hey, nonetheless, let's see if anything else we can learn about Mr. Ballmer. Ballmer oversaw Microsoft at a difficult time, so he helped Microsoft recover. Everybody putting also recover from the .com crash back in 2000. Through the efforts to catch Google and search and Apple and mobile phones. So Microsoft's biggest competitors is to, they got Bing, by the way. I don't know if they're ever going to catch Google as far as in the search engine. And then they have Microsoft phones. And I don't know if they're going to ever catch Apple and mobile phones. But, obviously Microsoft has software that everybody uses for the most part in their PC for Microsoft Office. I think that's their biggest product. The same year he retired from Microsoft, he bought the new NBA's Los Angeles Clippers for $2 billion. That's the same sports team that Doc Rivers, the black coach, he coaches, right? That's the same sports team that's obviously in Los Angeles rivals the Lakers. Now, here's the interesting thing. We do have billionaires. We do have black folk with money, but we hardly ever see them go into ownership of the things that they like most, like sports. Now, there may be some red tape there, whatever the case may be. I'm not quite sure what that process is, but he bought it for $2 billion. I wonder what it's worth now. He also ramped up his giving in 2014, writing checks to his wife's alma mater, putting $1.9 billion in a donor-advised fund. So he got rich. He gives money back to where he went to school, which is not, he didn't graduate from Stanford. He went to another school before Stanford, okay? And then he does a donor-advised fund. This is all for write-offs. This is all to lower his tax bracket, kind of sort of. He tried. I mean, I don't think you're gonna be a lower. You at 41.3 billion, okay? So his source of wealth, how do you get wealthy? How do you get rich? And he's 62. How did he get rich? Microsoft. Became the CEO, helped him recover, made him rich. Now, here's the thing. It makes sense, right? If you were to help a company become a billion-dollar company or a multi-billion-dollar company or a trillion-dollar company, and you running that company, well, they'll be willing to pay you a little bit for you to become a billionaire. That makes sense, right? Yeah, it makes sense. So what does that tell me? It tells me if I want to be rich, I need to attach myself to something that gives me the opportunity, that even has the opportunity to get me rich. In other words, what industry are you connected to? Right? What industry are you connected to? Now notice, right, he started as an employee. And then he became the boss or the CEO of that company. He didn't own the company, but he ran the company. But he started as an employee. So it took him 20 years to move up 1980 to 2000. Took him 20 years to go from employee to boss. So there's some people who don't want to be an entrepreneur. That's okay. But if you're going to be an employee, work your way up so that you can get paid. Now, I'm just saying, don't make it 45 years. You know what I'm saying? It'd be interesting. Okay, what did he do to move up in 20 years from employee to boss? Who was he connected to? What type of person was he for the company? How valuable was he? Obviously pretty valuable if he got promoted. All right, so there's a lot of different ways. Obviously, there's a lot of different ways to get rich. And you can get rich as an employee, but you got to move up the ladder. You're going to have to kiss a lot of butts. You're going to have to kiss if that's what you want to do. You're going to have to kiss a lot of butt, okay? All right, did you know Ballmer and Microsoft founder Bill Gates were classmates at Harvard? This is how he moved up. All right, what does that tell me? Okay, what about your friends? Will they let you down? Well, you better make sure you know who you connected to. Who are your friends? Your associations. Not always about what you know, about who you know. Him and Bill Gates were classmates. He probably was cool with Bill Gates when they were talking about all these ideas. And then Bill Gates got rich and he said, I'm gonna take care of my homies. It ain't no fun if my homies can't have none. We can't be mad. We do the same thing. Oh, we was cool. You believed in my dreams. Okay, I'm gonna bring you on because we gonna rise up together. Ballmer created a website called usafacts.org for people to look up and understand where the government is spending money. Anybody ever heard about that? usafacts.org. I didn't know that. I wonder if it's still up. Let's take a look. USA Facts, to see where the government is spending money. This would be great for all those political people that want to, you know, I mean, I don't know, you know, we can always debate or you know, have a conversation about whether they're telling the truth about where they're spending money, but it's a website. All right, look at that. Look at that. Where the government is spending their money. Foreign aid and foreign affairs and national foreign affairs and foreign aid. Standard of living. Look at that. Hey, look at that. The American dream. Education. Look at that. Funded by state and local. The federal is not spending no money. 785.9 high school dropout. Look at it. Y'all need 65.9 college enrollment, 60.1 high school dropout rate. 34 other metrics. Now, why is this important? This is important for those who are trying to do something and they need stats to prove what they're trying to do. Man, look at this website. You can just come here and get the stats you need to back up your proposition in order for you to go get some money. You know what? Let me talk about this for a second. Because many times there are people who have ideas, but they have no stats. And I'm like, okay, you need stats. And they just keep talking about the idea. Like, you need stats. You need something to prove that you think whatever it is that you think is going to work. Everybody putting down some stats. You need stats. You need facts. You need numbers. Numbers don't lie. Do the numbers back up your idea? Listen, I'm telling you, you might have a great idea. Well, guess what's going to happen when you stand in front of the sharks? When you stand in front of the sharks, you know what you're going to say? You're going to say, how much did you sell? They're going to be asking these questions because they want to know, you know, if the stats back up what it is that you say you want to do, what problem you want to solve. Is it worth the investment? You know what I mean? Does it reach enough people? You need the stats. Too many people just say, I think I got a good idea. No, you think you got a good idea. Do the numbers back up your idea? So this is great. This is a great little website. I mean, I've always thought, you know, look at this. National defense, it's good. It's interesting to see where the money might be, you know, where it's allocated. 302, health. Look how low health is. 149 compared to 750 for defense and stuff like that. Man, no wonder. Look at this. Safeguarding consumers and employees, 19.7. Sustainability, self-sufficiency, 109. Oh, look at it. Look at this. How much government spending on savings programs like Medicare and Social Security? What are the results? I ain't mad at, I'm not mad at him for creating this website. It's a pretty good website. Pretty interesting. I'll be interested to see all these other stats. So now y'all got another website y'all can go to get some stats. usafacts.org. Okay? usafacts.org. Now, let's keep moving. Here's what I wanted to get to today, man. Now we're going to talk about the Black Business Spotlight. All right, the Black-owned business. Everybody put it down on Black-owned. The Black-owned Business Spotlight. So Black Enterprise, every year they whatever, they create a file and they send out you know, the 100 most successful businesses, Black-owned businesses in America. So we're going to go through this every day. We're going to find out about these companies. We're going to find out about who runs those, who started those companies, the founder, and all that stuff as well. So we can know, so we can know some of our own Black-owned business. So number one on the list, the largest, most successful Black-owned business in America is called Worldwide Technology. It's located in St. Louis, Missouri. It was founded by a brother named David L. Stewrd. And they provide IT products and services, all right? Their revenue in millions in 2017 was 10 million, almost $11 million. They hire. They have about almost 4,700 people on staff, okay? This is the number one Black-owned company in America. Now, I don't know about you, but if I'm Black and I run a company and I'm in IT, Wouldn't it make sense that I would know about worldwide technologies, that I can learn what they have done to be successful? Again, if you want to be wealthy, you study wealthy people. If you want to be successful, you should study successful businesses. You want your company to be successful, but you don't even know who the top dogs is in your company. That don't make no sense to me. Anyway, so worldwide technology. Here's their website, www.wwt.com, and I'm looking at the About Us. That's all I want to look at. They create game-changing technology solutions. Technology can do more than keep your everyday business running smoothly. It can drive your success. At Worldwide Technology, we use proven and innovative approach to help large public and private organizations discover, evaluate, architect, and implement advanced technology. It was founded in 1990. Worldwide Technology, the largest Black-owned business in America, was grown from a small product reseller. Look at that. Went from reseller. What does that mean? That means that they were like a drop shipper. They were buying something from somewhere at wholesale and selling it into the market at retail. A reseller. So probably it was some technology stuff, some computers, some microchips. I don't know what they were selling, but they were reselling stuff, and then they turned that into a technology solution provider with 10.4 billion in annual revenue. So that 10.7 that I saw, that was billion, not million. So 10.4 billion in annual revenue and more than 5,000 employees. Now, my question to you, Black people, why nobody talking about this company in the Black community? It's the #1 Black-owned business in America, but yet we got Black History Month coming. We need to be talking about current history. This is right now. Worldwide, everybody put in the console hashtag WWT. Hashtag WWT. Worldwide Technology, the #1 Black-owned business in America that nobody's talking about. Except us here on the Money and Power Show, where Black folk talk about money. All right, we serve technology needs of large and public-private organizations around the globe, including many of the world's best-known brands. WWT ranks 8th on Glassdoor's Best Places to Work in 2018 and 40th on Fortune 100's Best Companies to Work For list. Our Advanced Technology Center is a physical campus housing labs that are used for product demonstration, proofs of concept, building references, architecture, and so much more. These labs have been virtualized and made accessible to our customers, partners, and employees around the world via a proprietary cloud portal. The ATC brings hundreds of technology companies into one environment. These companies are anchored by Silicon Valley heavyweights like Cisco, VMware, NetApp, Dell, EMC, HP, and several others, but also include emerging tech players like Titanium and Diggin. Individually, these companies are impressive, but when integrated with worldwide technology, we create game-changing solutions. The technology products and platforms in our labs are quite impressive, but the engineering talent that work side by side with our customers and partners and what drives the real innovation, the ATC environment creates a multiplier effect of knowledge, speed, and agility that benefits our customers anywhere, anytime. There are multiple dimensions to the ETC ecosystem, but for many who have experienced it, they simply view it as the Silicon Valley in St. Louis. So the worldwide technology is the Silicon Valley in St. Louis. The #1 Black-owned business in America. Worldwide Technology is founded by a Black man. All right. So here's some stats: 10.4 billion in annual revenue, phone number to call, and all that good stuff. Headquarters in St. Louis, Missouri, 2 million square feet of warehousing, distribution, integration space, integration labs in US, Europe, and Asia Pacific. They're global, 5,000 plus professionals, 3,000 plus engineers and technical resources. Now, another question for you. For all of our Black engineers that may be out there, you ever thought about contacting Worldwide Technologies and taking your talents to a Black-owned company? What a novel idea. Now, let's take a look at Mr. David Stewrd, who is the founder of Worldwide Technology. Black man. 3.4 billion in net worth at this point as of 129. And of course, I don't think they keep that current all the time. Now, David Stewrd is co-founder and chairman of IT provider Worldwide Technology. In 1990, he put up $250,000. He earned from 2 previous auditing ventures to start the St. Louis-based business. So he took his money that he earned from the other auditing ventures. He was an auditor of some sort, and he started this business. In the early days, Stewrd frequently went without a paycheck and once watched his car get repossessed from the office parking lot. Today, Stewrd is majority owner of the 10.4 billion sales company, whose customers include Citi, Verizon, and the federal government. He grew up in the segregated South with 7 siblings. His father worked as a mechanic, janitor, and trash collector. He's 67 years old. The product of his source of wealth, IT provider, he's a self-made billionaire. In other words, it wasn't passed down to him, right? He's married. His education is a Central Missouri State University. He got a Bachelor's of Art and Science. Stewrd donated $1.3 million to the University of Missouri St. Louis in 2018 and created the David and Thelma Stewrd Institute for Jazz Studies. So I want y'all to understand, you can't believe the stuff when they say we don't do stuff for our own. He donated money back to his alma mater, and he also created an institute back at his alma mater. I don't know what the Central Missouri State is. I don't know if it's a black-owned HBCU or not. I don't care. I just know that he went there and he said, well, that's what helped me get me to where I am. I'm going to give back to where that is. His daughter was a producer for Manchester by the Sea. And that's what we got there. Okay. So we got another billionaire that I didn't cover in the Black Billionaires Club, the book that I need to get added. Mr. David Stewrd, people, a billionaire, black billionaire, started a company and runs the #1 black-owned business in America. Worldwide technology. All right. So yeah, that's fantastic, isn't it? I mean, isn't that good? This is good stuff, huh? This is good stuff, man. We talked about stock market. We're gonna get into that just a little bit more at USA. We're gonna do that. USA Facts, found that out, right? We're learning things, man. Learners, keep learning, keep taking it to another level. You learn more. All right, let's dig into time for us to dig in the Dow. Time for us to dig in the Dow. We're gonna be looking at a company this morning called Chevron. Y'all might remind me, I gotta go to the website too, because I'll be forgetting. Chevron currently $112 and 17 cents per share, $112.17 per share. Its growth this year is only up 3%, 3% for the year. If you're investing in Chevron at the beginning of the year, then your money will be up 3% now, okay? 3% for the year if you decide to had invested in Chevron at the beginning of the year. Of course, Chevron, this is their trading volume. Over yesterday, a lot of people are trading over about 7 million trades per day over the last 3 months for Chevron. Market cap, this is a $224 billion company, a $224 billion company. I noticed this $224 billion. The company that they run is $10.4 billion. You see the difference? The $224 billion company. Not sure what's going on with the earnings growth from last year. The earnings growth this year is up 120%. Why is that? Because the price of oil, right, is rising, which means it's going to be good for their earnings, right? Next year, earnings growth for the next 5 years is expected to go up 3%. Revenue growth for last year is up 21%. I really like this. The PE ratios are pretty solid for Chevron, by the way. Their next reporting date is going to be February 1st, so that's going to be in 2 days, 3 days. They're going to report their earnings. Very interested to see what's going on there. Their annual revenue, right? Their annual revenue. This is what they sell. They sold over almost $135 billion worth of stuff last year. All right, $224 billion company. Last year, they sold $134 billion worth of stuff. The annual profit, though, last year, they only profited from that $134 billion that they sold. They only profited $9.2 billion. I don't like that number. Hopefully, that's going to rise. Now, last year, obviously, the price of oil was reducing, which means that Chevron had to sell at a reduced price to be competitive, which means it crunched their numbers as far as their profit. But as oil rises, people, as oil rises, the price of oil rises, it's gonna cause a ripple effect for these gasoline companies, these oil companies, to then increase their profits. And as they increase their profits, typically what you're going to see more investors investing in these places where people are actually making money. That only makes sense, right? So the net profit margin last year was 6.82%. I don't like that number. I like to see that jump up a little bit for Chevron, but I will tell you, I believe I can fly with Chevron. Energy, minerals, and integrated oil, that's a sector and the industry Michael K. Worth is the CEO. I definitely will be adding Chevron to my watch list. My goodness, I'm seeing opportunity galore. I'm seeing a company that is on sale. I am not playing with Chevron for real, for real, for real. Matter of fact, I'm going to make sure I look at my investment account today and make sure I add Chevron to my watch list, because this looks like a company that's on sale. Of course, I'm a big believer in oil. You don't have to be. I am. That's what matters. It matters what I believe for me. You're going to have to believe what you believe for you. So the experts and their forecast on Chevron, man, it's $112. They're saying, man, the low over the next 12 months for Chevron is $122. That tells me that they believe that Chevron's on sale, the experts, quote unquote. The medium for it said, man, over the next 12 months, based upon our forecast, man, the middle of the road for Chevron over the next year is $135 a share. That's 20% growth if it reaches the middle. Now, if it gets to the high of what they forecast, $160 is a 42% growth. I mean, let me ask you guys this question. How many guys would like to, how many guys would like to see your money grow by 42% in 1 year? See, some people don't think it's possible. Your money to grow, not your money to grow by 42% in 1 year. If that were to happen, how excited would y'all be if y'all invested in Chevron and it did that? Oh my goodness. What a year. Your money to grow. Wow. So that's what the experts are saying, supposedly. Supposedly the expert. Anyway, profile for Chevron. Let's find out what Chevron does, by the way. So Chevron engages in provision of administrative, financial management, technology support for energy and chemical operations. It operates through the upstream and downstream segments. The upstream segment consists of exploration, development, production of crude oil and natural gas, liquefaction, transportation, and regasification associated with liquefied natural gas, transporting crude oil by major international oil export pipelines, processing, transporting, storage, and marketing of natural gas and gas to liquid plants. The downstream comprises refining of crude oil into petroleum products, marketing of crude oil and refined products, transporting of crude oil and refined products by pipeline, marine vessel, motor equipment, and rail car, and manufacturing and marketing of commodity petrochemicals, plastics for industrial uses, and fuel and lubricant additives. Chevron was founded in 1906. Chevron is over 115-year-old company. Been around for a while. Okay. And they are headquarters in San Ramon, California. Now, as we look here, we see, okay, they reduced their employees over the last few years, and we understand why, because the price of oil, again, is going down, which means that their profits are going down, which means they got to cut costs. They got to fire some people. They got to get rid of some people in order for them to save money, for them to remain an asset, or to remain, valuable to investors. They got to do what they got to do to make sure that they stay in profit. You understand that? So sometimes these job losses, it just has to do with how successful these companies are. It makes sense. You probably do the same thing. You start losing a lot of money. You see that you got more people than you need. You start getting rid of people. Okay. All right. Lord Jesus. We're going to skip news. I'm going to skip charts, because that's things that I would do for the individuals, those that join the Black Billionaires Club. Of course, you can do that. You can choose to join the Black Billionaires Club. You can choose to go in depth with us. You can choose to do that and find some wonderful quality opportunities as we dig into these investment opportunities. But, it's a choice. So you can do that. Just simply go to theblackbillionairesclub.com if you choose to join today. All right. Here's the forecast, guys, from the 23 analysts, offering a 12-month price forecast in the future. All right. Basically, I mean, it's pretty simple. They're saying, hey, it's time to buy Chevron. No sales, no underperforms. They got 25 people that they were polled, 25 analysts that were polled. They said, man, 16 of them said it's time to buy. Three of them said, man, if you buy right now, it's going to outperform. It's going to outperform. It's going to go higher than the median. And then 6 of them said, oh, just hold right now. Okay. This is what's going on. This is money. This is where you can decide, you can choose, put some of your money into places that are connected to these wonderful, great companies that fuel our economy. That's kind of like a pun, huh? So earnings per share. This is a forecast by quarter and by annual. So you got to let previous 4 quarters, next 2 quarters, previous 4 years, next 2 years, projections for the next 2 years, actual results from the previous 4. Sales, previous 4, those are real results. Projections are anticipated results. Real results from previous 4 years. Next is going to be your anticipation for the next 2 years, right? But really, all you got to do is look down here. Earnings per share, the projection is annually up 120%. Sales projections up 21%, or growth on their sales, growth in their earnings per share. This is what the projections from these quote-unquote professionals are saying for Chevron. Take a look at the financials. I'm going to try my best to breeze through this because I kind of talk about this every day, but you know, it doesn't get old. Income statement, right? Net revenue, that's how much they sold. Cost of goods sold. When you're in business, it costs you to do business, right? You got to buy inventory in order to sell inventory. So this is the cost of goods sold. This is stuff that you can write off when you're in business. But of course, you know, until you get in business, you won't understand that you have more tax benefits when you're in business than when you're an employee. Right? That's why I say full-time employee, part-time business owner until you become a full-time business owner. I'm telling you, we don't adopt this methodology as black folk to own stuff, right? Instead of just work for stuff, we're going to always be at the bottom of the barrel. Let me just keep going. Gross income. Gross income, that just means how much they actually made after they sold some stuff and then they paid for the stuff that they sold. Gross income. Now they have to pay what on their gross income? The same way you got a paycheck, you get a gross income on your paycheck. They got to pay taxes. They got to pay expenses, things like that, right? So they're paying their expenses and they're paying their non-operating expenses, would be their taxes and stuff like that, debt and stuff like that. They got taxes down here, right? And then now they got what they call net income. This is what you on your paycheck. This is what you get to spend after you pay your Medicare, after you pay your taxes, state and local taxes, after you pay into your retirement accounts. You get the net income to spend to buy your food and pay for your bills and pay for your house and stuff like that. Pay for your car note and all that stuff. So their net income after all this stuff that they sold, their net income is $9.2 billion. No bueno. No bueno. Last year they had negative income. Or 2 years ago, they had negative income, 2016, no bueno. Which is why we can probably see that their stock price has probably decreased over the past 2 years. But let's go see that in just a second. Let's go see it right now, matter of fact. So let's see here. What has happened with Chevron over the last 3 years? Boom, 3 years. So they had a rise, actually rose in 2016, 2017, rose in 2016. Then they got the reports, went down, middle of the year went up, got the reports at the end of the year, started to come down, now we're going flat. Interesting. Financials. Man, Chevron. So that was the income statement, balance sheet. Knowing numbers, looking at numbers, right? I recommend it, right? Assets, what they own, right? Assets, equity, what they own, total assets, $253 billion. Liabilities, what they owe, total liabilities. This is why people are investing in Chevron. Look at this, $253 billion is what they own. They only owe $105 billion, which means their equity, everybody putting also equity, their equity to their shareholders, their equity to the people who own the company, their equity to the people that invest in them is $148 billion, which means if they were to go out of business today, they're walking away with $148 billion that they pay out to their shareholders and their CEO. If Chevron, a $115 billion, 115-year-old company, that's a $224 billion company, were to go out of business today, if they were to close the doors today, they could sell everything and walk away with $148 billion. Everybody put console, wow. A 115-year-old company can walk away with $148 billion if they were to close the doors today. You see why? See, here's why I do this. I have no qualms about any type of investing that you decide to do. But as black people, we typically only talk about real estate investing. That's what I hear a lot. And that's cool. Do your real estate. Not too many black folks talk about stock investing. You see what I'm saying? I don't see too many black folks talk about investing in stock, where I don't have to go out to no property and look and find, you know, the location. I ain't got to do none of that stuff. All I got to do is sit here on my computer and do what most people do, play a game called money instead of playing a game called Call of Duty, and I can strike and I can shoot these wonderful companies that are 115 years old, that are $224 billion value, that if they were to close today, they would still pay me $148 billion in equity. I really want you, I don't know if y'all all understand what this really means. Like equity, positive equity. Whew. Some of y'all only understand it from a real estate perspective when you got more equity in your house. But this is a big business. $148 billion. That the experts are saying is undervalued. That the experts are saying, man, at $112, over the next 12 months, we're saying, man, Chevron ain't gonna be no lower than 120. That the experts are saying, not that I'm saying, that the experts are saying. Positive equity. Whew. Ooh, Lord. I know that's right, Donto. How many guys like sitting at the house making money? How many guys like actually just being on your phone, hitting a little button and making money? Which is why, I mean, I have nothing against any other type of investing. That's cool. As long as you're investing, I'm cool with that. What I had to determine to myself was how much leg work do I have? How am I going to build my businesses that I run and also be out in the field? I don't need to do that. That ain't what I needed to do. So I had to find another vehicle for me to invest in. And I just happen to be on the computer all day. So if I'm being on the computer all day, why not go ahead and look at some investing that I can do from the computer? I'm telling you, I think we should do it all. I'm not saying don't do it all. I'm saying have a diversified portfolio, get you some real estate, get you some gold, get you some stocks, get you some crypto, man. But at the end of the day, get you something. Get you something. Hit the like and share button, please. Hit the watch party button, please. We talking about money, man, and it's just so sad that when we talk about anything else, when we're talking about spending money, everybody shows up. When we start talking about making money, very few people come. It's sad what we have actually conditioned ourselves to enjoy. Spending way more than we make. We get an opportunity to look at something like this. We all go to the gas station. My goodness, this is ridiculous. 148 billion. Oh Lord. Why would you not? I ain't even got to the good part yet. That's just part of the good part. I ain't even start looking at the good part. Anyway, here's the net income, man. This is like a cash flow. I want you guys to understand in business that cash isn't king and credit isn't king. Cash flow is king. All these stupid debates about cash versus credit is absolutely just a waste of time. Cash flow is what is king. When you run out of cash, now you go use your credit so you can what? Have some cash flow. So the debate that people put out that know absolutely nothing about money is absolutely stupid. The only reason why I even use credit, if I ever use it, if I were to ever use it, is for me to get some cash flow. Oh, Lord. Sorry, right. Here's the net cash 9.3. Now, what do they do with their cash? Right? What do they do with their cash? They invest it. Right? Hopefully try to make more money, which they haven't been good at. Okay? All these negatives. They get cash through financing, through debt. They actually get debt. Right? And had to pay it back. That ain't work out for them either. So they're not really good at this whole investing and financing thing. Okay? Oh, wait a second. Okay, that's borrowing. Reduction. They buy stuff, they pay out dividends, right? They pay out dividends. So they're a paying dividend company. So anyway, they're not looking too good on this cash flow statement. But guess what? It doesn't matter. Why doesn't it matter? Because if they ever get into trouble, they can leverage their $148 billion in equity to get more cash flow. You understand? So although they're not really good at investing, although they're not really good at financing, if they ever run into trouble, this $115 year company, which obviously says they're stable, and it got $148 billion in equity, which tells you that they can leverage that equity to get them some more what? Cash flow, if they ever needed it. Could you? Do you have something that you can leverage that if you were in a bind, you could then, get you some cash flow? All right, I'm going. We say pay out a dividend. We just found that out. These are. I'm not gonna look at this. This is just too much for you guys. For those that don't have, this is new to you guys. It ain't really worth me coming here no more. I'm gonna stop coming here. This just talks about who trades these companies, who trades Chevron versus the insider trading, which would be the people that run the company, the CEOs, the CFOs, and all that stuff, and the institutions, which be your mutual fund companies, your retirement fund companies, all that stuff. So this just talks about what activity that they're doing, institutional activity, which is the big organizations that buy and sell on our behalf. Vanguard, top 10 owners of Chevron, right? Here's your top 10 mutual fund holdings, or the mutual funds that hold Chevron. Okay. All right. Now let's keep going. Black folk talking about Monday morning here on the Money and Power Show. So what we want to do, what I do, is as an investor, I want to go to the horse's mouth, and I want to look at and see what Chevron has to say about Chevron. We looked at what CNN reported. Well, let's go to the horse's mouth, and they have a tab called Investors, which many of us don't ever go to. So unless you're an investor, you probably never come here. So here's an Investors tab. So this is for investors or potential investors, right? You got investor relations. You got a fourth quarter earnings call on February 1st. That's what's going to happen in 2 days. They're going to do their earnings call. They got an app. What? Chevron investor relation app. What? My goodness. So if you're invested in Chevron, right, you get your little app to get the latest financials and more. Wow. Wow. I've never seen that before. See, they even evolved and said, you know what? Everybody don't want to get on an investor call. They don't have the time, but they invest in us that we're going to create an app to give them the information they need so they can know what's going on with the company and the financials. They got an investor relation app. What? Oh, Lord. A Chevron investor relations app. This isn't for the people that want to go get gasoline. This is for the people that want to make their money work harder for them than they work for their money. This is for the people that want to invest into equity. What? Oh, Lord. Okay. Now look at this. I want you to understand it. Individual investors, you do not have to go. There's a lot of ways that you can invest. We're going to probably do a class pretty soon on how you can become an investor. But one of the ways is you can actually invest or buy stock directly through the companies. That's what we see here. They got a transfer agent as well. Here's institutional investors. This is for organizations that want to invest in Chevron. They got to contact that person. Okay. What I want to look for, though, I still don't see it. Shareholder stocks dividend data. So we go to shareholder services, right? I want to see. Now we can look at all this other stuff, but the only thing I want to see is though right here. I want to see this dividend. Where are we at? Annual report. What did I miss? Did I miss something? Let me go back. I want to see the dividend. Where is it at? Here we go. View dividend information. So look at this. 115-year-old company. Every year, man, you go back and go back and go back and go back and go back. And it shows the history of the dividend that they pay out every quarter. So this is 1995. I'm going to go to 1999. 20 years ago, They're paying 61, basically 65 cents per quarter per share back to you as an investor in cash, right? We go down to 2009. It's about 68 cents, 65, 68, right? 65, 68%. It was a drop in 2007. It was a drop. Let's see here. It was a merger of some sort, a stock split is what occurred. So 2004, there was a stock split, which split that dividend from 80 to 40, a 2-on-1. So that means you split it by 2, divide it by 2, and then you multiply the shares by 2. So that's a stock split. So that's why you see this go from 80 to 40 cents. So then from there, it's still 40 cents to 45 cents, 45 cents to 52 cents, 52 cents to 58 cents, 58 cents to 65 cents, 65 cents to 68 cents, 68 cents to 72 cents, 72 cents to 81 cents, 81 cents to 90 cents, 90 cents to $1, $1 to $1.07, $1.08. Now we're at $1.12. This means that just for being a shareholder, Chevron will be paying you back. Basically, take that $1.02, $1.12 times 4, because it's by quarter, $4.48 back for every share that you hold every year. Okay? And it increases. This is called passive income. Everybody put accounts on passive income. So when I teach people about multiple streams of income, I don't have to do anything with this but buy a share. And then they're going to pay me every quarter out of their dividend back for the shares that I hold. And that's considered passive income. That's cash. Now, what I do with that cash is up to me. But you see this? If you just held, I mean, let's just take 112. Let's just do $1.12 times 4 times 10. 10 years, that's $44. I know that doesn't seem like a lot, but that's just $44 coming into your house, coming into your portfolio, and all you do is just sitting there watching it come in. It's just trickling in, trickling in, trickling in. But it's passively growing over time. You see? And then if you reinvest that, and then the value of the stock appreciates, now that $44, could become $400. You see? This is passive income, a dividend. And they have been paying this dividend forever. So it's not likely that they're going to stop paying the dividend. You see what I'm saying? This goes all the way back to 1990. I'm not quite sure if it goes how long they've been, but I'm pretty sure they've been paying it longer than that. So Chevron, my goodness. So here we go. So Chevron is a company that's been around for 115 years, roughly. They're $228 billion. It's a $224 billion company, right? They have equity at this point of last time they reported at $148 billion in equity. The forecast from the quote unquote experts of Chevron are saying that right now at $112 over the next year, we expect Chevron to be no less than $120 per share, which means they're expecting nothing but growth for Chevron. Question is, are you going to be a person that's just getting gasoline at Chevron, or are you going to be a person that owns Chevron? Wow. This is the Money and Power Show. Well, black folk talk about money in the morning. We talk about money, business, investing, stocks, crypto. We talk about money. We've covered today the stock market recap. See what happened in the stock market yesterday. We dug into the data, look at a company called Chevron, which is one of the 30 most significant stocks in America. We've covered a billionaire, Mr. Steve Ballmer, the CEO or the owner of the Los Angeles Clippers, and how he built his wealth. We've covered the number one largest black-owned business in America, and its founder, another billionaire who happens to be black, Mr. David Stewrd. All today on the Money and Power Show. My question to you, did you hit the like button? Did you hit the share button? Did you hit the watch party button? Because here's the reason. We have to start waking people up about their money. our friends, our family, and say, man, listen, I might not know it all, but man, you can at least tune into something like this where you can learn what you don't know about money, so you can start to put yourself in position to win with money. Everybody put comments on win with money. So you can put yourself in position to win with money. You understand? In the comments below, share with us one thing that you learned today. Share one thing that you learned today. It's my goal, my job, to make sure that you get value out of the times you spend with us here today. I know and I understand that money is foreign to many of us. It's a foreign language, right? It's a foreign language. When I was sitting in all these seminars and workshops, I was the youngest, I was the darkest, and I was the onlyest. I was the youngest person in the room. I was the blackest person in the room, and I was the only black person in the room. Must be a reason why they don't teach this in school. Because once you and I take control of our money, once we are no longer in debt, once we are no longer slave to the lender, we are really free. One of the last places to conquer, two places, I believe. One, you want to free your mind. And then you got to free your finances. And let me say it again. You got to free your mind, and then you have to free your finances. That's when you'll be free. It starts with your mind, though. It starts with you deciding that you're going to learn what they're not going to teach you. That's what I had to decide to do. It starts with you making a decision to join a club like the Black Billionaires Club, where you can learn what they're not going to teach you. Why do I say it like that? Because you're not going to learn it for free. Free is what's gotten you into the position financially that you're in right now, whatever that is. If you're not willing to invest to learn the same way that you went into massive debt to get a certificate, then you'll never learn. And then therefore what happens? Your children won't learn. Well, they could learn, but they probably won't, because they're going to follow in the footsteps of the parents. They're going to follow what you show them. And how can you teach them what you don't know? Join the Black Billionaires Club today. Miss Lynn said, how money works, passive income. Andrea said, Miss Dean said, free your mind and free your finances. Let me see if there's anybody else here with us here today. I'm not quite sure. I'm not quite sure. Did I miss anything? I'm not quite sure. All right, my beautiful people, man, this is the New Black Wall Street and the Money and Power Show. I'm your host, ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar. I want you guys to remember this, that it takes a village, and it starts with us. Let's build these bank accounts. Let's build these businesses, but most importantly, let's build each other. And let's do it together. Join the Black Billionaires Club today. Don't delay. Stop procrastinating. You know you should join. Do it, and do it now. We all we got, people. And guess what? That's enough. I pray to God preserve each and every one of you, that you'll go out today. You'll have a fantastic, a terrific Tuesday. If you happen to be in the South, hey, watch out. Some weather's coming. Some snow's coming. Some ice is coming. They close the schools down and close the government down. It's okay, though. We're going to make it. We're going to make it. Hey, man, until tomorrow, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of the new Black Wall Street. The new Black Wall Street.